Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MICRON Technology INC annual report. MICRON Technology Inc. offers a wide range of products and services across various markets. The company's business units include Compute and Networking Business Unit, Mobile Business Unit, Embedded Business Unit, Storage Business Unit. Their product offerings include Memory Technologies, Dynamic Random Access Memory Semiconductor, Devices, Non-Volatile and Rewritable Semiconductor Storage, Devices, Non-Volatile Rewritable Semiconductor Memory, Devices. The company serves various markets, including data center, PC, graphics, networking, automotive, industrial, consumer, embedded smartphone, and mobile device markets. MICRON Technology, Inc. markets its products through a variety of channels, including direct sales force, independent sales representatives, distributors, retailers, and web-based customer direct sales channel. The surge in MICRON Technology Inc.'s stock price by 84.67% in the past year can be attributed to a combination of factors. The company's record-breaking financial performance, driven by a 49% increase in revenue to $37.4 billion, has been a significant contributor. The growing demand for artificial intelligence, AI, memory, and high-bandwidth memory, HBM, has positioned MICRON as a critical supplier, with its cloud memory business unit experiencing a 214% year-over-year revenue increase. A tightening global memory market, fueled by AI and data center expansion, has led to significant price hikes for both DRAM and NAND products. MICRON's strategic investments in expanding manufacturing capabilities and technological leadership have also enhanced its profitability and margin expansion. The company's consolidated gross margin improved to 40% for fiscal 2025, up from 22% in fiscal 2024. Furthermore, positive analyst sentiment has contributed to the stock price surge, with numerous Wall Street analysts upgrading MICRON's stock ratings and raising price targets due to strong demand for its memory products. Overall, MICRON's robust financial performance, exploding AI demand, strategic investments, and highly positive analyst sentiment have driven its stock price to skyrocket in the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. Accelerating AI demand is driving growth in DRAM and NAND sales. Improved market conditions, including strong demand growth and industry-wide supply discipline, are contributing to revenue growth. Higher average selling prices for both DRAM and NAND products are also driving revenue growth. Revenue decline factors. The CAC decision has impacted business, particularly in the domestic data center and networking markets in China. Inventory write-downs had a negative impact on gross margin in 2024. Key business unit drivers. Cloud Memory Business Unit, CMBU, is experiencing revenue growth driven by increased DRAM bit shipments and average selling prices. Core Data Center Business Unit, CDBU, is experiencing revenue decline due to decreased demand. Net income and profit margins. A significant turnaround. The company's financial performance has undergone a remarkable transformation over the past 2 years. In 2023, net income was -$5.833 billion, but by 2024, it had surged to $8.539 billion, marking a significant improvement of $14.372 billion. This trend continued in 2025, with net income reaching $17.525 million, a staggering increase of $9.006 billion compared to the previous year. Profit margins have also seen a substantial boost, rising from -9% in 2023 to an impressive 40% in 2025. The gross margin increased by $16,289 million, while operating income margin improved significantly from -36.8% to 26.2%. These improvements can be attributed to the company's ability to increase average selling prices due to strong demand growth, particularly in AI-driven markets. Additionally, manufacturing cost reductions and a higher mix of higher-margin products have contributed to the improvement in profit margins. The turnaround is a testament to the company's strategic efforts to adapt to changing market conditions and capitalize on emerging trends. As a result, the company has not only become profitable, but has also achieved significant growth in net income and profit margins. The company is indeed generating positive operating cash flow. The data from the financial summary reveals a significant increase in net cash provided by operating activities over the past 3 years. In 2025, the company generated $17.525 billion in operating cash flow, a substantial jump from $8.507 billion in 2024 and $1.559 billion in 2023. This upward trend indicates that the company is successfully managing its finances and generating sufficient cash to support its operations. The company's debt level and interest expenses have undergone significant changes. The debt level increased by $7.47 billion from 2024 to 2025, with a notable increase of $7,706 million from August 29, 2024 to August 28, 2025. However, this was partly offset by the prepayment of $700 million of principal amount. On the other hand, interest expenses decreased significantly in 2025 compared to 2024 due to increased capitalized interest, with net interest expenses decreasing from -$33 million in 2024 to $21 million in 2025. Overall, while debt levels rose, interest expenses declined, indicating a shift in the company's financial dynamics. The financial performance of segments and regions varied significantly in 2025. The Cloud Memory Business Unit, CMBU, and Automotive and Embedded Business Unit, AEBU, were the top performers, with CMBU experiencing a 257% revenue increase to $13.52 billion and AEBU achieving a 3% revenue growth. In contrast, the Mobile and Client Business Unit, MCBU, and Core Data Center Business Unit, CDBU, underperformed, with MCBU's revenue increasing by only 2% and CDBU's revenue growing by 45%. Geographically, the United States and Taiwan region excelled in 2025, with the U.S. generating $24.11 billion in revenue and Taiwan producing $5.67 billion. Conversely, mainland China, excluding Hong Kong, and the other Asia-Pacific region struggled, with mainland China experiencing a decline in 2024 and the other Asia-Pacific region performing poorly in 2023. Management's outlook and strategy. A focus on innovation and expansion, the company's management is committed to driving growth through strategic investments, expansion, and innovation. Key initiatives include investing in research and development, expanding production capacity globally, and developing new products and solutions to meet customer demands. The company is also prioritizing investments to align with its business strategy and optimize returns. A focus on customers, technology leadership, and manufacturing excellence will drive the company's success. This includes streamlining the product portfolio, exiting non-optimal segments, and investing in new technologies and facilities. A reorganization of business units into a market segment-focused structure will enable the company to stay at the forefront of innovation in each market segment. Overall, management's outlook is one of growth, expansion, and innovation, with a focus on delivering value to customers while driving long-term success for the company. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. Specifically, it has paid quarterly dividends of $0 and 115 cents per share since at least 2025, as mentioned on pages 30, 34, 39, and 47 of the financial summary. Additionally, the company has authorized the repurchase of up to $10 billion in outstanding common stock, with approximately 24,996 shares being repurchased in the fourth quarter of 2025. Concerns about inventory buildup and supply chain disruption. The financial summary highlights several concerns that may impact the company's operations. One major concern is inventory buildup, which includes elevated inventory levels, industry oversupply, and declines in pricing for products. This has led to inventory write-downs, indicating a potential issue with managing excess stock. Another significant concern is supply chain disruption, which can be caused by shortages of raw materials or components, constraints within the supply chain, and suppliers allocating capacity to other customers. Delays in obtaining equipment due to limited supplier capacity and disruptions in transportation lines further exacerbate this issue. Government actions and regulations, such as export restrictions, tariffs, and trade protection measures, also pose a risk to the company's supply chain. These factors can lead to unavailability of materials when needed, ultimately affecting production and revenue. That concludes the financial summary for MICRON Technology INC. Feel free to comment below, and I will be happy to answer them when possible.